Have you guys ever went to the store and you were like, man, I remember when this was this price and that was 5 times as much? Like Snickers. Huge Snickers fan. I remember Snickers was 49 cents. I went to the store the other day. It was $2.58. That, my profiteers, is called inflation. But today, we're going to show you how to beat inflation from an investment standpoint. Before we get started, though, comment below and let me know what you remember was low and now is high. But what's going on, y'all? Mario Payne, of course, certified financial planning, beautiful Jacksonville, Florida. Have over 16 years of experience practicing, managed over $250 million. But on these YouTube streets, I'm just here just to give us some great information. And today, we're going to talk about how inflation is killing us, but as investors, how we can profit off of prices going up, and away. Let's get started, though. Now, I all know y'all remember these stores, right? The 99-cent store. Y'all know y'all went to one here and there, picking up some stuff. People shop there, of course. I've been there plenty of times. But look what is happening.
Tonight, every 99-cent store is preparing to close their doors for good. It's impacting families who depend on those low prices, as well as, of course, the employees working there.
CBS 13's Esteban Reynoso is live for us in South Sacramento.
Now, profit margin, right? You think about 5, 10, 15, 20 years ago, how much 99 cents lasted and how much it is now. So I imagine that profit margins are not as big what it used to, right? Of course, they're getting stuff from China, and from Taiwan, which helps a profit margin standpoint. But was it really making money?
Sacramento, with the impact really already being felt there, Esteban.
Well, yeah, Marley and Hunter, everything inside the store here at this 99-cent store in South Sacramento on Florin Road is 30.
Frozen food? What frozen foods can you get from, yes, on the left-hand side? Y'all please tell me in the comments, and I might be naive, and if I am, my bad, my profiteers, my bad. But what can we possibly get from a frozen food standpoint besides a popsicle that's shrinkflation, right? No diddy. No diddy. Whoa, no diddy. But that is smaller in size than what it, no diddy, which was smaller than what it was 4 or 5 years ago from a packaging standpoint. Whoa, what am I doing? But you guys get the picture.
Percent off. So you can imagine, right, how many people are going in and out of the store. Really, the doors have never really closed today. There were people even waiting outside to grab a cart and go in and grab whatever they could get their hands on, even grabbing as much as they could with their arms and walking towards the store. However, while some customers are embracing these discounts, for some employees and economists too, this is a troubling sight.
Very troubling sight. Again, 99 cents does not stretch how it used to be. From a wage standpoint, wages are not going up like it is with inflation. Social Security is not going up. We know pensions are going away, and individuals invested in their 401k, but the average investor makes about 2.5% in their 401k when the market averages 8%, because they do the wrong thing. They buy high, sell low, or stay in those money market account funds that's right now paying 5.5%, but historically pay closer to 2%.
Sad. I can't get my apples and bananas now.
I think people are going to miss it.
Whether it was walking in with their own carts or leaving with their hands full.
A little bit of this, a little bit of that.
Shoppers here in South Sacramento are bummed about losing this 99-cent
Knickknacks. When I think about the 99-cent store, I think about knickknacks. Again, things that was made in Indonesia, Vietnam, and China that we just throw away. A lot of wastelands were created because of the 99-cent store.
only store.
It's usually busy, but not like this. This is over busy.
Brian Croft remembers when this store first opened its doors and how vital it was to the community here.
It's probably in this neighborhood. This was a good store for this. This needed to stay here, and now it's going to be gone. So
The company announced Thursday all of its stores, nearly 400 across 4 states, would start liquidation before
400 stores. You think about how many employees that hurts. Ah, man, feel for them.
eventually closing for good, leaving many here with fewer options for shopping.
Now I just have to shop at the stores. At the grocery store, pay higher price. A lot higher price now.
And it's leaving all of their employees without a job.
For the people who have families, rent, mortgage. So they're pretty much like, oh, well, we'll get our money, not yours.
And best believe it ain't no severance packages. Well, let me take a step back. I believe, allegedly, that is no severance packages, right? So you might get, 2 weeks of payment for free. Not for free, you're not working for it, right? So 2 weeks after they close down the stores. But you ain't getting no 6, 9 month severance package. So what those employees gonna do?
This is pretty scary. Sanjay Varshney is a professor of finance with Sacramento State. He says this growing trend of dollar stores closing is troubling.
Given that the cost of living in California already is very high, if these stores shut down in the very neighborhoods where they used to be popular at one time, it is going to have a major impact on those populations.
So why are they shutting down?
Major impact in a negative way.
Dr. Varshney says raising wages is having a big effect on companies.
Try and raise the prices, on goods and services because you're raising the salaries and raising the cost of production. They're simply going to pass it on to the consumer. Clearly, 99-cent stores clearly is not able to afford the low margins.
Exactly. Profit margin used to be close to 50, 60, 70%. Now around 15 to 20%. You're not making as much money. And with now minimum wage in California specifically being $20 an hour, not including people who work at bakeries. So Governor Newsom putting the money in the pockets of Panera Bread. It is what it is. But of course, if companies don't make as much money, what do? They close down stores. They close down stores. My profiteers, individuals don't have a job, which is sad. But as investors, it's not good for the employees. But as investors, we're going to go over an investment that when inflation runs rapid is a company that makes money. Lego. Now, my profiteers, you're going to say, Microsoft? How does Microsoft make money when inflation is high or low? Well, when interest rates are high, and right now, interest rates are high. Inflation is going down, but when, of course, inflation is high, we raise rates to cool down or bring down inflation. Companies like Microsoft, with a lot of cash on hand, is going to make money. And it shows. The market went down, right? And Microsoft went down too, right? It went down by almost 40%. So almost as much as the S&P 500. But the recovery with Microsoft, amazing, right? Microsoft, right? Almost doubling from its bottom, from 218 now to 426. And as we can see, look at that. Whoop. Look at that trend, right? Corrected, back up, correcting down. But why did Microsoft do so well? People think it's AI, kind of. ChatGPT, kind of. But they are making goobers of money because they are cash rich. When companies have a lot of cash on the balance sheet, my profiteers, what do you think they're doing? They're just smacking those in money market accounts that's paying 5, 6. In their case, they have so much more money, 7%. So they're basically making money as if they're invested in a stock with no risk because it's a money market account, making 7%. And how much, my profiteers, are they making? Well, how much cash they have? Let's see. Well, Yahoo Finance is a great place to kind of see the internal, under the hood of a company. And Microsoft, look at this. Income, revenue, wow, $227 billion would it be? Revenue per share, 30.61. But I'm looking at this right here, their balance sheet. Their balance sheet, yes, my friends. Yes, my friends. $80.98 billion in cash. That's not what the company is worth. That's how much they have in cash. They have, yes, almost $81 billion would it be in cash. I repeat, almost $81 billion in cash. Market cap, currently $3.17 trillion. So literally 20%, almost, right? 25% of their money is in cash. And let's look at the charts from a time value money standpoint. to see how much they're making a year just on their cash. How can we do 81 billion? See, 100,000, 100 million? Yes, 81 billion. And again, we know right now money market's 5.5%, but you think they're going to a bank saying, I'm going to get 5.5%? No, my friends, they're going to JP Morgan, they're going to Bank of America, they're getting that 7%. 7%. 1 year. They are making $5 billion a year just by sitting in cash because of rates being high right now. So do you think they care if interest rates and inflation is high? Well, inflation is high. Will it hurt their profit margin? No, because they do everything at scale. They're in the cloud, enterprise, cloud services, SharePoint. Everything is in the cloud. So inflation's high. They all do enterprise. Doesn't really hurt them. They have a very, very high profit margin. Also, high rates means high interest rates as well, to the tune again basically $6 million. Ridiculous. So Microsoft, my profiteers, they are making literally $5.6 billion a year by just being in cash, collected because of high interest rate. It is unfortunate that stores like the 99-cent store is going out of business because of high wages and high inflation, meaning high rates. But this company in particular, Microsoft, is a company that's making money because of it and will continue. So my profiteers, I'm going to ask the question, how can we take advantage of high rates and high inflation? We buy companies who have a lot of cash, whole lot of cash. Microsofts of the world, your Apples of the world, the companies that have the largest coffers in cash, they are making revenue as if they was a small cap company without no risk whatsoever. And for an investment standpoint, exactly what we want. To make money with the least amount of risk, $81 billion in cash, getting approximately 7% a year. That's $5.6 billion a year of revenue just by sitting in cash. I would take that any day of the week. Let me know what you guys think. We are Microsoft. We stay in the way. What you guys think about the 99-cent store? Definitely sad that they're going. Might be some more economic opportunities out there for the people that are laid off. Prayerfully, they get into tech and become entrepreneurs. But hopefully, y'all get on their feet. But comment below what you guys think. As always, love is love. Let's make some Payneful profits together, y'all. Peace.
Making no money mistakes, make a payment on your bills and you still late, yeah. Payneful profits to help you seek change, and you just wanna get paid, yeah. Tired of making no money mistakes, make a payment on your bills and you still late, Payneful profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Bitch at the check, you knowing it could be different, you know.